Hello, everyone, and thanks for joining us today. Over the last 20 years, low-cost and high-impact technologies like cloud computing and SaaS have fast-forwarded the disruption of every industry on Earth. Founders have been able to scale their startups and reach enormous global audiences faster than ever before with much lower initial capital investments. Meanwhile, the fourth industrial revolution has been gathering steam with AI, robotics, genomics, the Internet of Things, quantum computing, blockchain, becoming a bigger and bigger part of our lives. Entrepreneurs everywhere have had an immense opportunity to totally reimagine business models as we know them. The golden age of innovation has been upon us. But as the challenges of recent years have culminated in a cost of living crisis, market instability, and the recession we are likely facing today, has that dampened entrepreneurs' willingness and ability to disrupt? Has the downturn destabilized investors' confidence? What does this all mean for innovation? I'm Andrea Hajdu-Howe, partner and co-head of capital at Antler, and we are here to tackle the question, will the golden age of innovation prevail? I am delighted to welcome two industry titans and Antler Board members. Sheila Patel is not only Antler's board co-chair, but also vice chair of B Capital Group with 30 years of experience in financial markets and investments. Sheila most recently served as chairman of Goldman Sachs Asset Management. She has taught at the Columbia Business School and holds degrees with the highest honors from Princeton and Columbia. Sheila, welcome.
Thank you.
James, welcome also. James Anderson is an Antler Advisory Board member. He is also chair of Swedish investment company Kinnevik. And recently, James was a partner of Scottish investment firm Baillie Gifford, where he was the manager and then joint manager of the Scottish Mortgage Investment Trust. James, earlier this year, was featured in Lunch with FT that dubbed him the unlikely star of tech investing because of his successful backing of outliers such as Tesla and Amazon in the early days, despite a legion of dissenters. Sheila, James, it is absolutely delightful to have you with us today. Now, before we begin, a reminder to the audience to submit your questions in the Q&A that we will get to later in the hour. The Q&A button is just at the bottom of your screen. Now, let's kick things off with a question for everyone in the audience today. Markets this year have been painful, but have they been as dismal as in previous downturns? You will shortly see a quick poll. Which year do you remember being the worst for investment returns using the S&P 500 performance as a proxy? Was it 2008, global financial crisis? Was it 2002, the dot-com crash, 1974, or actually this year? So whilst we have a bit of a technical glitch, you can actually put your answers into the Q&A tab if you wish. However, now that I can't take everyone's temperature, I need to reveal the response, which is all of these years, of course, were pretty terrible, but 2008 was the outlier with a negative 36.6%. It was worst in terms of the calendar year performance. Now, 2022, with about a negative 19% performance to date, does rival some of the worst years in history. How did things get to this point, and where are things heading from here? Sheila, how did we get here?
Thanks. Well, answer that as quick as I can. It's complicated. I think that we have many things that are contributing to a confluence of difficulties for the markets. And I think you also end up with cycles, right? So look at a few things that I think are particularly important for where we've ended up. We've just come off a global pandemic that's been unprecedented in terms of its disruption of global supply chains, global industry, global manufacturing. You pretty much can't name a business or an industry or a sector or a social need that wasn't disrupted by this experience. And I think we as humans overestimate how quickly things can rebound to normal. Supply chains are still incredibly debilitated, and not just because of transport or logistics, but because people are spending money on goods rather than services and have gotten used to that during a pandemic that kept them at home. We also have geopolitics. The market never likes challenging geopolitics. And I think we're living through an era, as they always say, you're blessed to live in interesting times, or maybe you're not. These are very interesting times when it comes to geopolitics. And I think those are incredibly difficult situations for investors to navigate. Therefore, retreating a bit is the norm. Add to that the capital models in our area, in particular in early stage and venture, have been tested over the last few years. There are very different models. I would liken it to the 90s when quant investing exploded and you saw people use momentum investing, use different strategies, and you've seen investing in companies without the norm of strong involvement, board seats, et cetera. So a lot of change in the models. It doesn't mean it's bad or good. It just means when circumstances change, models get challenged. So put all those things together and add inflation and all the requisite economic disruptions, and it's not that surprising we've ended up where we are.
Okay, so we got the pandemic, we've got supply chain issues, we got geopolitics, we got changing, market sentiment. So, James, how does this actually influence the private sector?
I think, Andrea, it influences it very seriously. I might have voted myself in your poll for either 1974, because although no one here apart from myself will remember its peculiarly bad British circumstances at the time. But I would probably, in all seriousness, have said that I worry most about what's going on at the moment. And that's despite being old enough that I've lived through so many of the other crises that we could mention. And I say that because I think this has hit, whatever it may be, and I'm not quarrelling with Sheila's description and wouldn't dare to, but, I think we are at such a sensitive point in the evolution of that golden era of innovation that we face very dangerous positions at the moment. And, I come across already far too many private companies, not bad companies, of course, ones that need to invest for the future and ones that above all need to be able to raise more money at any point. And I do worry that if the current circumstances or the extent of the circumstances of the first 6 months of this year and probably the last 6 months of last year in many ways carry on, that we seriously endanger a lot of the next wave of innovation that I think is actually otherwise profoundly exciting. So, I think in terms of your underlying question, it's a critical few months to come, and I don't really like saying that.
And okay, so 1974, just to give you the stats, that was negative 26% from January to December. Can you give us a little bit of an example of what you worried about the most? What are the impacts of the next 6 months that you are particularly focused on?
Yeah, I can. I think we all know, Andrea, and I'm sure that you two obviously do, but I don't want to seem condescending saying this. But one of the things that most strikes me about this downdraft is that even more than in previous ones, it is completely immune to thinking about the prospects, fortunes, value of individual companies. It has been completely uniform, and this attempt to differentiate that so many people like to come up with is, I think, pretty futile. Now, my experience in previous downturns has been after 6 months or so, although the mood can remain pessimistic, although the macroeconomics or the geopolitics can remain pessimistic and downright scary at times, that you start to get some differentiation between those companies that have been unfairly pummeled in share prices and those that hasn't. But to make that a bit more specific, one of the areas that I find most exciting, but also most terrifying from this aspect, would be in healthcare broadly defined, in particular in those areas where data meets genomics. I think their prospects for serious change for the benefit of humanity, not just of investors, is profoundly encouraging. But those are, as you well know, companies that need to raise money. There is barely a healthcare investor who doesn't come across that perennial, even successful companies need for money. And I worry a lot that so many of those type of companies, despite their fundamentals continuing to improve, are down 80 to 90% in both private and public markets, that we have a serious crisis in that sort of area. I think interestingly enough, if there's any area where it seems to be able to hold out a little at the moment, and I stress it's a little and it's at the moment, it would be in some of the, if you like, decarbonisation, climate change, which in a day when it's 30 degrees, even in Edinburgh, is, I think, a considerable relief that may not be doing quite so bad. But, I am worried in a very practical sense about what some of the inability to raise capital or the ability only to raise extraordinarily dilutive capital means at this stage.
Yeah, I mean, under normal circumstances, even healthcare investors typically tend to be a lot more patient. So your point is well taken. Of course, you were an early investor into Moderna. Sheila, any views on the private sector? Anything else to add on how this current turmoil is going to impact the private sector?
I think James has hit it spot on in terms of the challenges to innovation. If you think about the funding of innovation and what we've seen over the last few years, in the one sense, you might call it a golden age. There was so much capital, there was so much support, there were so many opportunities. On the other hand, you might say every cycle of innovation needs a moment of rationalization. And the challenge here is that there were probably some things funded that weren't as good as the number one or the number two idea that was similar, but everybody was able to get funding. Now we see the shakeout of that. Now we see the challenges. James mentioned healthcare. And in particular, if you think about biotech, there was record VC fundraising in 20 and 21. I mean, almost $30 billion in 20, almost $40 billion in 2021, and it's declined dramatically. What does that mean? That's a huge challenge to a sector that we need, where innovation shows up and they're solving some of the biggest problems that face humanity. But what does a shakeout like this mean? It actually means that large pharmaceutical companies, that investors from, the old traditional big cap marketplace, which has a lot of cash on hand, then goes and looks, and this is their opportunity potentially to pick up those innovative, thoughtful, smart groups that have put together great ideas, but are unable to fund them in a more difficult time. And so I think, is that always the way innovation gets founded? No, I think that many times the large cap, and whether it's in the biotech industry or think about fintech, many other sectors we could give example to, large companies have trouble fostering innovation internally. But I would say a lot of large companies I know are looking at the current marketplace and saying, we've had our eye on a number of innovators, and this is our chance to participate. So it's interesting times for sure when you see a challenge to financing innovation.
Oh, for sure. I mean, I think, in recent years, VC has come into the spotlight. We, just augmenting your stats, but, we saw record levels of funding globally and a record number of unicorns being born in 2021. I think one of the most staggering things that, we've looked at as a global investors is that just in the last 8 years, the world went from having 37 cities boasting one or more unicorns to staggering 170 cities, right? Even the most conservative consultants were suggesting to clients to allocate more. So just focusing really on the future of the VC industry. What is the case to allocate to VC in 2022? And how should investors think about allocation, Sheila, from their overall kind of macro top-down strategy?
Well, it'd be great to get James's thoughts on this too, but I think, there are a few competing issues here, right? At the micro level, every investor, particularly large institutional investors, has to look at where they are today. Where do they stand today? And in many cases, their VC portfolios, if they have them, and their private investments overall have outperformed to the extent that they're a percentage of their portfolios that are incredibly challenged. It's the denominator effect. Yeah. So that will be a barrier to some extent to funding in the private space. That said, there are many, many others who have been waiting in the wings or who haven't brought their allocations up to where they might have targeted and who look at this as an opportunity. I think the key thing to look at is, we talk in terms of vintages. We love to look back at history and so on. Make it simpler than that. Some of the best ideas are born of adversity. We're about to face some very adverse times, and companies innovators, founders that survive through more adverse times, build stronger enterprises, come up with ideas that really are solutions to problems that have been begging to be solved. And it really forces us to channel our greatest capabilities to the greatest need. And I think that means it's usually a fabulous time to invest when folks are potentially the most nervous or most unnerved by what they see in the marketplace.
Over to you, James. Would love to hear your views on this.
Yeah, well, as an introduction, Sheila, I was saying to Andrea before you joined us that despite the Antler logo in the background, I'm actually sitting in Adam Smith's last house in Edinburgh, Panmure House, where we've been having an event celebrating innovation and academic research. And my mind is tempted to try, thereby, to even more than usual, to think of what Adam Smith would have made of this. And I think the first thing is that I confess I would be on his side in being deeply suspicious about what big companies will try and make of this moment. I absolutely agree with you. It's probably better that they rescue some of these companies, but I don't believe in the record of large companies as really harboring innovation at their heart. You know, I think they want to pull up the drawbridge after they've got to the top. And I fear that may be one of the circumstances of what's happening at the moment. But, you know, the rest of it, I'm totally with you. You know, I, like you, I'm sure, serve on various investment committees. And if we roll the clock back 18 months, there were all these deeply enthusiastic investors only looking out for the opportunity in both price and access terms to be able to make more investments in private markets and in venture capital. Of course, now they've suddenly become a lot more suspicious. I think that's the wrong reaction, and I think it would be a tragedy both for the investors and for the community at large if we pull back at this juncture. So, you know, I'm trying hard, however demanding it is at times, to make the case that we must take opportunity rather than be paralyzed into doubt by the dramas and melodramas of the last 6 months.
Yeah, I really, really wanted to pick up something that you've said, Sheila, about the founders, which I think is obviously very close to our heart here. And it's critical for us to consider how this current environment is impacting them, right? And the very people that who fuel progress and innovation. And you mentioned something which is absolutely profound, which is that, of course, we have historical evidence that crises and shocks do not deter the most determined, right? And so we do have a list like Google and Salesforce and Facebook and Uber and Venmo and Slack and Airbnb and Pinterest and all of these things that we all know have been born out of during adverse times. Still, I think, you know, this downturn and downturns are extremely challenging, and we are advising and guiding our founders on how to navigate this period. There's a few questions that are coming in the Q&A, and I will go to those because they are very, very focused on this founder issue. But before I go there, more of a macro question. I mean, you know, is this still a good time to build a business? Sheila, you want to tackle this first?
Sure. Look, I think that the best time to build a business is when you think the market is receptive, or maybe a bit earlier than that, I should say, to the problem you're trying to solve, right? I mean, there's one of my colleagues at B Capital, Howard Morgan, who's similar to James, has been very, very early and was number 50 on the ARPANET. And he tells a great story of when he invested in Uber. Very early on, a close friend of his, also an investor, said, I invested in this exact same idea, a different company. And he said, oh, well, you know, what happened? It was 10 years earlier. Guess what? It was still a great idea, but you know what didn't work? This cell phone. It wasn't up to speed to solve the problem. And so the technology that was needed to support the idea wasn't ready. And so I think founders at every moment, not just at a moment like now, face a real reckoning as they try to take their idea and say, does it fit the moment that's coming? It doesn't even have to be the moment that's now, but if it's a moment that's 20 years from now, it gets a little tougher. I also think that it's an interesting moment for founders to think beyond capital. And when we look at what the environment has been over the past few years, I would say some of the expertise that's been brought to bear on venture, may or may not have done founders a good service. The indexation of venture, the building of portfolios more, and I come from a derivatives background, so more like an option portfolio where I spread my bets, or maybe it's because I spend a lot of time in Vegas and, we spread it around, we see what happens. But, in Vegas, you can't help number 19. Right. But in venture, you really can. And so I think that founders have to look to build themselves a set of stakeholders that brings them more than just money, that brings them the contacts in industry who can help their product get the airing that it needs, that brings them the expertise in technology, that brings them the expertise in business building, like human resources and the many other things that come with putting together a company that's able to sustain through difficult times. And so I think every founder is not just building their idea, but they are building a group of stakeholders who can help them bring their idea to fruition with an eye towards whether it suits a marketplace in a reasonable amount of time.
Yeah, no, absolutely. And James, do you have anything to add to Sheila's sentiment here around? Is it still a great time to build a business?
Well, first, I should absolutely stress that I agree with what Sheila was saying there, and I think that whole ecosystem around the founders is hugely important. I'd lead on to that, say that I think that truly great founders will make it their time. And I think that most of our task is still engaged in trying, as it is for Antler, to identify those truly great and distinctive founders. But yeah, I would go further and say, if we get this right in terms of the financial and investment background, then the opportunities seem to me to be way greater than over the course of the last 35 to 40 years. And I really mean that. And I'm incredibly jealous of you two being a lot younger than I am from the point of view of what you could see from that point of view. Because I think when we come to it, and Sheila pointing to her iPhone is part of this, that just about all the innovation, remarkable innovation, but still just about all the innovation that's come about in the last 40 years or my entire investing life has been because of progress in Moore's law, in semiconductor technology. And I think we're now at a point where both the applications of that semiconductor technology, but a whole series of different technologies, which are actually far more important in the world, are beginning to be at a critical point of exponential growth. So I would say that we talked about healthcare already. I would extend that into synthetic biology. I would extend that into all the decarbonisation technologies. And what strikes me in a different way is truly amazing about the government. I think we know the answer to lots of the problems. We have the technological way forward. And what I find both intriguing, but at the same time either deeply inspiring or deeply worrying, is that we aren't taking those routes that are already mapped out. So I think the potential is for this not just to be a golden era, but a golden India squared or a platinum era or whatever you want to define it as. But I think that is about us being able to finance that in the right way and back the right people.
Just picking on this thread a little bit of, the right timing, the right people, the right ideas. I wanted to just ask you a question that is coming through now, the Q&A, which was, thinking back to 2004, James, can you talk to us about how did you know that you needed to put money into Alibaba?
I think, and it would actually have been about the same point that we put money into Amazon as well, which, in retrospect, I can't understand what took me so long, to be quite honest. But of course, in that case, it didn't do too much damage, did it, given what had happened in the previous years. I think the intriguing element is that both those companies, and I would argue in most examples of companies that have the potential to be truly great. We all know that there are many pieces of fortune and stories that need to be coped with during it. But I think that you have the elements of a market that is almost unlimited in scale. And both Jack Ma and Jeff Bezos would have paid tribute to that and would have said, we can't define the scale of the market because the improvement of the technology, the second point, is so rapid, so exponential that we don't know what that will be making us for us in 10 years' time. And one of my favorite companies over the years, decades, has been ASML in Holland, which, as you'll know, is behind many of these developments in that way. And I was actually the last company visit I did while still at Bailey Gifford. The point they were making is, and I felt able to honestly ask them this time, is that they know where their technology takes us in 5 years' time, but they have no idea what the applications would be. So I think you've got this willingness to be open-minded about it that matters hugely. But again, in both the Alibaba and the Amazon cases, I think what you saw is you had leaders who had their very own version of how the world works, and therefore they ran their companies in very different ways from the norm. And that's what intrigues me, is I think identifiable at an earlier stage than we mostly tend to admit. It's where what we call culture moves into how a company is actually run. And I would both say that as an investor, I find that absolutely essential to be able to identify what is different in the thinking from first principles about this. And also, it's what I would encourage founders. They know their own job better than I do. But I think trying to answer that question of how are you going about this differently from all your other competitors, which is where I thought your Uber story was going, Sheila, but it wasn't in the end.
That's
But Sheila, what do you think is so rapid, so exponential today? Like what are the innovation trends that are emerging today that you are excited about? We talked about healthcare. We touched a little bit about climate tech, but not much. Like, what excites you in the private markets today?
I think there are so many technologies, and James hit on a point that I'd like to elaborate on, which is there's so much opportunity to take the innovations that have enormous potential and aren't being applied yet. So take an area like agriculture.
Yeah.
How much innovation has there been over the last few thousand years, aside from going from a hunter-gatherer culture to farming and sustaining the growth of humanity through agriculture. There's been huge innovation. So I'm not discounting that we've been able to innovate over the years, and that was well before technology. I mean, hybrid vigor and all that. We all know the things that have come, but look at what's possible today from a sustainability perspective. Look at the potential for ag tech to mean that fields aren't sprayed with pesticide when we're so worried about water and sustainability and all the factors that go into that. But instead, drones can be used to see if a particular plant or section is ailing. Think about the challenges we're seeing today. Again, back to geopolitics, because Ukraine was the breadbasket to so many countries, and there is no fallback for this. Ag tech can help us challenge the notion of how we're feeding the world, the best ways to do it, and the most sustainable ways to do it, so that we use less water, we use less chemicals, we're using basically things in a way that help us sustain humanity for hundreds of years to come, not 3 years while we have an emergency, right? And I think that that's a great example, but there are many other sectors where that kind of work is needed. The technology to be applied to it exists, but the connection between the two is slow and labored because nobody's demonstrated the value of it yet.
Yeah.
I think that is a really powerful and terrific example that Sheila is making there. We've been involved with companies that are trying to make plants have their own nitrogen, for instance, or are really making progress in making carbon emissions far less, indeed retreating them. But I think it's also, Sheila, if I may, an example of where, unless those companies are empowered and found their way, I really don't believe there would be innovation. I think if they get brought up by big agriculture, it's not going to happen. So, we're that and else we need to help on this score.
Absolutely. And somehow we have to cultivate that innovation that doesn't happen in big companies, and yet deal with the fact that agriculture has become a big business.
Yeah.
Right. And so between those two, that's actually a place where it's another good example of that ecosystem that a great founder builds, so that their message and their solution and their innovation can be brought to bear on a larger industry that needs help. That's not just capital. You're going to have a lot of money and your message will not get out. You need to have access to the right network to get that idea into the hands of those that most need it, even if they're resistant.
Yeah, absolutely. And I think what we're talking about here is actually quite interesting, because obviously Antler is at the forefront of, hey, how do we find these people who otherwise would not have found each other? How do we commercialize ideas that otherwise would perhaps not have seen the day of light? And then how do we create a community for these founders that doesn't just talking about your point, Sheila, doesn't just provide them with capital, but much more along this actually long and pretty treacherous journey that they have to go through for it to be something sustainable at the other end. I think I want to stay with this focus on founders, because there's quite a lot of questions that are coming in really specifically around how around founders' journey. And there's one question here around what would your advice be to founders who are looking to raise in the next 6 to 12 months, particularly for Series B and beyond, which is a difficult spot to be right now. Sheila, any thoughts on this?
Okay, I think it's absolutely challenging. So there's no simple answer that says do this and everything will work out. I think that at that moment, which, as you said, is a critical juncture, the net has to be cast wide. You have to think about a variety of stakeholders. You have to think about finding people that share your vision for what the company can be, so that they will help you through a difficult time. I think that, one of the biggest challenges that we're hearing from a number of companies is that in their early days, they were in the heyday of what we've seen in terms of capital flowing into the industry, and those investors have abandoned them. Those that said they would always be there for the next round are gone, right? And then I think it speaks to that group that was built. Did you include an Antler? Did you include somebody who's with you for the long haul and means it because they're invested in your model, not just invested in an index approach to this very sensitive stage? It's not like investing in public companies. It's not like a major public company cares if you buy or sell their shares. To these founders at this stage, Series B and right around that point, it matters dramatically. And so founders have to understand it matters too, and pick their partners as wisely as they can in a difficult environment.
Yeah. Sorry, James, please go ahead.
No, again, it's just that Sheila has provoked some extra thoughts on this. I think these are ones that are particularly important from an Antler perspective. It seems to me, Sheila, that for all that there are many difficulties and complications in American capital markets, at least in America and probably in China as well, to be fair, there are communities of people who've been doing this for long enough, and they know what happens in a downturn. I think that we, trying to help Antler and trying to help extend this throughout the world, need to accentuate that offer to help, because many areas of the world, and I would include most of Europe in this case, people have not been through these downturns whilst there's been significant venture opportunities. And given that Antler is preoccupied, and rightly so, in trying to draw people into venture investing who might not otherwise have been founders, I think this becomes redoubled importance. So, effectively what I'm saying is what your observations are is even more true of Antler and even more true of the rest of the world outside America.
Yeah, we got a question, and this is something that I wanted to discuss with you. Thinking about what's been happening recently. How Sheila, I go with you with this question first, just because of your strong ESG background. But ESG for us is an important part of our investment process. how important are ESG considerations for investors and founders to navigate the road ahead? And then there's also actually a regulatory question that came in as well, which I'll pose afterwards. But let's just focus a little bit on ESG and the road ahead for that. Sheila, please.
I think that the pandemic actually was an important test for ESG, and I have to say, in the early months of the pandemic, particularly March, when the market was having incredible turmoil, and today we probably look at it's fine. No, people globally were apoplectic over a global pandemic, stoppage of travel. Everything stopped that February, March, and the market stopped too. I talked to many investors of huge size, sovereign wealth funds, to individuals investing. And to a person, I can't think of one who thought that ESG would make it through that period, right? And what I mean by make it through is still be a top consideration. Is this the first test that says, put all that stuff to the side, we just have to survive, or we just have to make sure our portfolio does okay? And what ended up happening is, I would say the globe showed that ESG actually did matter more than ever. You saw social considerations come to the forefront. You saw companies highlighted for how they were treating their employees during a pandemic. You saw a number of things, and it's hard to bring our mind back to that period because, again, we're humans, our memories are short, probably mostly for good reason. So we forget the bad and we try again. But when you think about that period, it was very heartening 6 months later to talk with people who had worked hard at bringing ESG into their portfolios and find out it actually had turned out to be very important. The companies with good governance that had been treating their employees well did better. The companies that were aware of the social aspect did better. Environment still mattered. And so today, when I think about ESG, I think actually about the investment opportunity. And, maybe as a last simple example, that there's been estimates that up to $9 trillion a year needs to go every year from now till 2050 to avoid climate change. That's how close we are. Last year, several hundred billion at best, right? If we're generous. And look at the heat wave we're all sitting in today, right? We're lucky our backgrounds are not just fires and melting asphalt. So something has to be done. That means it's a great space for innovation and for investment. And that means the globe is increasingly aware of that as well.
James?
Yeah, so just as I tended to be an extreme growth investor, I suppose I feel personally that what I can do, or people I work with can do, is more at the extreme, not just ESG, but impact on this and taking these directly on. I mean, to go back to something Sheila raised earlier, if we can help companies get to a position where plants can produce their own nitrogen, that makes a huge difference. At the same time, if we can help the development of clean electric batteries, this helps hugely. And, I am quite encouraged, not just Sheila's perfectly fair and upbeat description of what's happened, but also where geography fits in on this. For instance, I am currently chair of a Swedish company, and one of my fellow board members is one of the people directly behind Northvolt. Now, what Northvolt have done in building a clean battery technology in Europe at scale is inspirational. And I think there is more and more of that we can do. And I think that, of course, it would be great if we can get to the 9 trillion or whatever. But I think even making a difference with individual companies at scale and forcing them to have ambitions at scale is something that all of us can do. And I would plead that founders do that and that Antler helps them do that, because, I think it's a small number of companies that are really going to help us out of this situation, but a small number of giant and inspirational companies. And it's them that we need to focus on and help.
Yeah. There's quite a lot of different questions are coming in, which is a bit of a mixed bag in terms of topics. But let's just pick a few because I think they're super interesting. So someone's asking, when did you first learn about VC and what were your initial thoughts about the industry? And how have you seen it change since then? I think this change in the VC industry over the last couple of decades, in the US since the 1970s, I think it's a really interesting topic. And I'd love to hear your thoughts on not just how it's changed historically, but where is it actually going? Either of you, please.
Sheila.
Well, I have less history than James, but still a lot. So I'll start, but then I'd love to hear James's answer. Look, I was on trading floors in the 90s and the 2000s, and then moved specifically into the asset management industry. And you saw venture, but it wasn't named venture all those years. And when I look at what went on, particularly in trading in the late 80s and early 90s, and the innovation that was there were many startups actually in the financial space and people financing them. But again, nobody called it venture. It wasn't cohesive. It wasn't as robust an industry identity as you see today. That said, I think it sort of burst on the scene when you think about that part of the environment when you get to the dot-com era, and you had these many companies that had been founded with backers and so on, and then face their challenges, and today see which ones survive. So, I think learning about it was over my 30 years in the industry, but during most of that time, it wasn't named that. It wasn't called that, right? And so I think in terms of the future, yeah, it's great that now it's a cohesive enterprise. It still is an area that needs to be innovated in and of itself. Venture needs innovation as much as anything. And so I think we'll all continue to innovate in the way that we support companies, the way the capital is deployed, the way ideas are found. And I think in particular, one of the things about Antler that is so fascinating to me is, the point you brought up early, Andrea, about where innovation is and where unicorns have been and cities around the world. And we were not tapping into that before. I'd say VC only a few years ago was a zip code or two. And today to see investors like Antler bring it to places like Africa and India and, really take the best ideas from around the world and know that they could be brought to a global stage, that's how we'll solve some of the problems we've been discussing.
What will be the differences? James, I'd love to hear a few thoughts on this, right? Are the differences going to be driven by different development stages of different regions? How are you thinking about, just the sheer difference of, okay, well, it's been live and kicking in the US for 40, 50 years, but actually only in the last 8 years have we seen problems being solved, outside of the US in such a scale?
Yeah. Well, once again, I'd take my cue from Sheila. Your point, Sheila, about they weren't necessarily labeled to it. It's to my immortal embarrassment that I now recollect that in my first year of investing, both Genentech and Costco came in to see us as private companies. We didn't invest in either, which perhaps we've got better. We'll see. But roll that forward. I think venture has basically expanded because it's proven its worth. I think you can say that in terms of the returns over long periods of time, but also because we touched on this earlier, but I'll make the point more strongly. The severe failure of public markets. And the public markets don't really fund investment any longer. What they fund is paying money back to shareholders. They don't fund innovation in any serious sense. It's what we've been talking about at Adam Smith's house today. But where's it going now, Andrea, to bring that up to date? I remember probably a dozen years ago now, talking to the founder of Baidu in China, which at that point was doing extremely strongly, but still worth listening to. And Robin Lee said, venture capital needs three elements. It needs enough nerds. I think we all know that, but just about every city in the world has enough nerds these days. Back then, I probably wouldn't have expected, say, Romania to have the capability to do that, but it's spread huge widely. Certainly the Africa part of Antler is very encouraging and impressive. You need enough nerds, you need a big enough market, and I think most of these markets, despite the America-China clashes, are now transcending their geographical regions, and you needed enough finance. And I think just about we're there on all those. So, I think that as long as we can endure the environment that we started off by talking about, and we're also painfully aware of, both in terms of those three characteristics now surviving and in terms of it being global, we can do this. But I do think that the part that is worth thinking about is whether that leads to a change of generation in venture capitalists. It seems to me that most major structural breaks, whether it be in market terms or whether it be in the underlying context, mean that a different set of leaders apply. And I'm not particularly sure, for instance, that many people who've been used to investing in cloud technologies or software applications will necessarily be that well suited to financing long-term big capital investment in decarbonisation. So I think we need to think about, we were talking earlier about the importance of the right founders, sort of relationships with their capital providers and broader expertise. I think that expertise may be slightly different and may be quite challenging for some of the historic people. We've got used to this notion that the winners keep winning in venture capital. I'm not sure at a structural break moment that necessarily becomes the issue in the future. I don't think that's problematic from Antler's point of view, but I think it may be from some of the giant venture capitalists in Silicon Valley.
Sheila, anything else? Sorry, before we go on?
No,
I think that's a great point. And I think that specialization of expertise, maybe that James is talking about, and that understanding of the differentiation between sectors and how they evolve in venture, you see it today, but you don't necessarily see venture built to deal with that. For example, in many cases, as James has said, the public markets have not been the place that innovation's been able to happen. And you've seen a huge change in the last 15 years in the S&P 500, right? The entire composition has changed over. But even more importantly, so many companies stayed private for so much longer and realized their value that way. But that's a bucket statement. When you actually look at sector by sector, we started this conversation in biotech. That's a great example of a sector where value is often realized once something's in the public markets because of the long cycle for approval, even though you might have an innovative drug technology and be trying to get that through that cycle. The cycle tends to span venture private investing all the way into public investing before the investor realizes the full value. Should people be gated because they're in private or in public? People should be investing in the best ideas for the duration of the cycle of that idea. And you'll find that's different sector by sector. And I think that's something that venture is still adjusting to. And hence you're seeing the, everlasting funds, and you're seeing different vehicles that are trying to capture that. But it's a very crude tool for a very specific need, ultimately, that James is identifying. And we still have a lot to learn in that.
And this gating actually comes up. I have three questions here actually around this kind of artificial gate that we've created, which is the crossing over from private to public. Both questions sort of relate to this, which is will the majority of new companies prefer to go public or stay private longer? Similar question around IPOs, and I guess your view is that it really depends on the company and it really depends on their needs, which is what I'm hearing from you. A little bit more, digging deeper into sort of more personal stuff. How do we stay optimistic, right? We've got this current times of pandemic. We have wars. We have the downturn. Everything that Sheila, you talked about sort of 15 minutes ago, which is a really depressing list of things that are happening at the same time. How does one stay, in your words, James, a relentless optimist? Perhaps, James, to you first.
I think this is where, Andrea, it's symbiotic. We've covered, with the usual sort of slight arrogance of investors, at least in my case, the need for founders to select the right backers and to talk to them and take money from them. But I think we get our optimism primarily from talking to great founders. And there can be nothing more inspirational, both in the sense of their purpose, but also in the sense of the energy and intelligence and drive that they bring to this task. And I think that's been one of the sadnesses of both COVID and this sort of preoccupation with market conditions, is that we haven't done enough of that. And I think that totally energizes you. But, you know, I think also we should look at patterns of innovation and exponential change. You know, over the years, I think few people's work has helped me more than reading and talking to Brian Arthur about the exponential changes and empowerment of this. And we should remember that you're much better to be investing at a point when we've only reached 1% penetration and where the value is profoundly obvious, rather than being overwhelmed by companies that have proved themselves, but you're quite late on in this process. And, you know, I think one ought to remember that everything is cyclical as well. And, you know, that should actually make us more hopeful rather than pessimistic. You know, some ways, and I sort of think we should have been asking ourselves all these questions 18 months ago. And I'm sure we did in different ways. But, you know, that was the moment when you should have been wondering about your optimism, not at the moment. But absolutely, it's what these great founders with great exponential technologies have on offer, which is so wonderful about it.
So hang on. So you're saying it's cyclical. So tell us, when will it end?
Oh, I genuinely don't believe that most investors can possibly do that. You know, I think, and in this aspect, I think Buffett is absolutely right that those who wait until springs come will miss an awful lot of rabbits. In the meantime, you know, I don't believe you can wait until it's happened. So I think you look after your own finances responsibly, but you should carry on investing at the moment, regardless of whether you think you've got some indication as to whether the markets are close to bottom, have hit bottom, or have still got a long way to go. So, you know, I think market timing is a fool's errand. And certainly I would completely admit on my part, it's always been a fool's errand.
Sheila.
Yeah, look, I think that, you know, a great example of just human nature in and of itself is how difficult it is in the public markets to be a short seller. And people are just inherently optimistic when it comes to things like investing. And we have to maybe every once in a while contain our enthusiasm, use our judgment at the same time as we think about the positive aspect of innovation. And that's always the challenge. But I think that it's human nature to rebound too far the other way. And that's our risk today, being in a difficult marketplace, seeing challenges and sort of folding up the tent at the first sign of difficulty. You know, that's not the way the world works. The cycle may be longer, the cycle may be shorter. Guess what? You plant the seeds either way. And maybe we're back to ag tech here, but you didn't get to sit in the middle of winter and say, you know what? I don't think spring is coming. So I guess I won't plant my field today. There would not be several billion people in the world if that had been the choice that was made. And when it comes to innovation, similarly, that positive nature is what drives the human spirit and drives great ideas forward. That's what we have to tap into, but, you know, judiciously at times, but not with fear being our motivator. And that's always the risk in a downturn. It's a human nature issue. It's why behavioral economics had turned into its own enterprise. But, you know, could you even use the word economics? Is it a science? No, predicting human behavior is an art, I guess, at best. And that's what we all deal with. That's investing.
Is 2023 going to be tougher than 2022? And again, consistent questions coming through this. What do we think of 2023 versus 2022?
Well, for me, I would just reiterate, I honestly don't try and judge that. I should get on, do hard work, try and help companies and keep, as Sheila brilliantly puts it, planting those seeds. I would be, the one thing I would be amazed at, I would be amazed if from later this year, perhaps it's already beginning to happen, is that people don't start thinking about companies again. I think there will be differentiation. That doesn't mean that the overall markets can't go down or that inflation can't get worse or whatever. But it does mean that if we do our work and our deep thought with companies, we'll start to make progress. And, it's that we all know that the returns in venture capital don't really come from the aggregate. They come from a small number of outstanding companies. And just as, Andrea, your question about 2004, it was a pretty grim time, but if you do work on identifying companies and finding the founders you really admired with huge opportunities, then I can't remember whether it was 2004 or whether it was only 2006, but it starts to get better. So, please concentrate. We must attend to our own knitting.
Absolutely. I think we all agree that both, there will be challenges ahead from both public and private markets. And despite the recent volatility, VC-backed startups have an unprecedented opportunity to address a multitude of global issues. You mentioned a number of industries where this will be the case. And we should be in the business of building a better future for all of us. I think that, our discussion today suggested that VCs can adapt their models, and I'd be very interested to see, how this evolves over the next few years, and especially because this industry is globalizing now. And I'm going
to interrupt you for a second, Andrea, because I think that globalization is a really important thing in thinking about our industry in 2023 and beyond.
Yeah,
because that's actually a diversification effect that venture did not have before. And that's a really big deal. I can tell you from having lived through the global financial crisis sitting in Asia, it felt totally different in Asia.
Sure.
It took a long time to transmit through, and then the lingering effects were different. If you look at 2022 so far, the venture capital per capita investment is number one where? Singapore.
Yeah.
Where else is it hugely strong? Israel. What do we always focus on? The US, but the US is still doing okay. So we can't kind of go dig a hole in the sand and bury our heads in it and think that a tough year or predicting 2023 will be the future. I think that we have to also recognize there are many different ecosystems now in the venture world, and that's a real opportunity from an investing perspective as well.
No, thanks for that, Sheila. I think this globalization is extremely important to us at Antler. We think that this is almost our number one edge, which is that we are able to help our founders in every location and actually cross-border, as a sort of a moment's notice. So I guess the last question, because we're coming to the hour again, we came here to answer the question, will the golden age of innovation prevail? James, I'm going to go to you first, and then final words to Sheila.
Quite right. So I will answer it quickly, because otherwise I might well get locked into Adam Smith's house, which, whilst might be rather inspiring, might also be quite nerve-wracking overnight. Yeah, I think it is highly probable that it will, and highly probable that if it does, it will be more exciting than the last 40 years. I mean that profoundly. In many ways, as a founder of a synthetic biology company put it to me, all that's happened over the last 40 years, these huge fortunes that have been made by venture capitalists and by founders, has been by disrupting one small stagnant industry, which is advertising. We can now change the world completely, from healthcare to agriculture to the amount of carbon. And I can't think of anything more exciting. And, I don't know when, I don't know precisely where, but I think the opportunities are just brilliant and outstanding and thrilling.
Sheila?
I'm going to differentiate what we mean by the golden age of innovation. And I think the golden age of maybe venture investing, will we go through a dip and say, we're in bronze now. This isn't so golden, or whatever it might be because of some of the challenges, sure. But what I see as the golden age of innovation ahead of us is what James pointed to. There is so much technology that can be brought to bear beyond the narrow scope that we've seen to the moment. I hope everybody on this webinar has seen the amazing photography that's coming out of NASA from the latest telescope, and we're seeing galaxies we've never seen before. We're seeing detail far beyond our imagination come all the way back to home, and we are finding innovation in medicine, in biotech, in ag tech, in energy every single day. So I'm incredibly hopeful for the golden age of innovation and the solutions it'll provide us. I think that we'll be hard pressed to predict all of them. And that's our job as investors, to really try to think of them. But, the founders that come to us every day, somewhere out there is the founder that will solve a massive problem and be the next winner, and not just a unicorn for the making money aspect, but for those solutions to the globe's problems. And we have so many problems today. That's why, to me, the golden age of innovation is critical and should be foremost for investors' minds, from a global economics perspective, and for governments as well, who should be fostering innovation and realizing it's an incredibly important part of their future and their nation's economy, but also the global impact that those innovative companies within their borders will have.
Wonderful. There we have it both. Optimism prevails. Thank you very much to both of you, Sheila and James, for spending the last hour with us. And thanks to all in the audience for joining the discussion. We really hope you found it valuable. Goodbye.